Is Bitcoin setting up for a potential reversal back into a bull market? Could Bitcoin hit $100,000 this year or next? The internet is of course awash with misinformed opinions and nonsense chatter, which you will do well to ignore. As investors, we want a way to conduct our analysis that removes the daily social media mayhem and confusion and forces us to focus on the asset's price, because that is the source of truth. The most precise way to do that is to focus on the charts, which is known as technical analysis, which we will do in this recording. We will revisit the pattern that I reviewed in my previous update on Bitcoin that is still in play and could be the start of a bear to bull market reversal. So, if this recording helps to up your investor game, don't forget to like, subscribe and hit the bell notification. My name is Zahir Anwari. I'm the co-founder of SublimeTrading.io. We have helped hundreds of private investors over the past 10 plus years profit from trends in the markets using our simple to learn methodology. I also write for a number of publications, including Benzinga.com, and I'm regularly invited to guest speak on how everyday people can skyrocket their stocks performance, focusing on the next 3 to 5 years. Okay, so let's switch over to the charts and have a closer look at both Bitcoin and Ethereum and get an idea of what the future holds. Remember, investing is simply a game of high probabilities. Good investors apply patience to allow for the best high probability environments to emerge. Until then, we stand aside and focus on capital protection. So what kind of market conditions are we dealing with in the crypto space? Let's find out. Okay, so this is a typical 3-screen setup of mine. I've got the monthly in the top left, the weekly in the top right, and the daily time frame down here across the bottom. We're looking at the higher time frames because that's really where we get a very clear picture of the history of the asset. So if the asset has performed well in the past, then it's very likely to perform well in the future. We also get a very clear picture of what the asset is doing right now. And then we can also build a very clear picture of what the asset is likely to do going forward. You can't do this on the lower time frames. People tend to have a very unhealthy addiction to lower time frame trading, known as day trading, on 5-minute time frames, 1-hour time frames, ultimately intraday time frames, anything less than a daily time frame. It's all noise. It's the sexy way to quick riches. That's what it's been sold as. But ultimately, that's where a lot of money is lost and a lot of dreams are broken. We can't deviate away from the principles of good investing, which is to think long term. And also, by thinking long term, not only do you have a far more peaceful life, but also you then have the strength of compound growth in your favor. And that's really where the money is made. If you look at the best investors and traders over the decades, they've all embraced compounding. So we must do the same. Look away from day trading. It doesn't work. Focus on the higher time frames, and that's across the board, not just Bitcoin and the cryptocurrency market, but also stocks, commodities, and the forex market. It's really where you want to be. The investor mindset always holds true. So let's start with the monthly, work our way down to the weekly and then the daily time frame. So if we start with the monthly time frame, now we are of course in the month of July. If we look at June was a very bearish month. In the month of June, we saw price fall by 44% at its peak. There was a bit of a recovery and it closed around 37-38% in decline. Now, if we look at it in a lot more detail, what we can see is that this weakness in price, which added to the decline in price since November of last year, overall in Bitcoin, there has been a drop of 70-odd%, significant drop. In comparison, if you compare that to the S&P 500, which fell around 25% in the same time period. So you can see how volatile the cryptocurrency market is. It doesn't mean that you ignore it. You just need to adapt your approach to a far more volatile market. Now, what we do know looking at Bitcoin is that when it does trend, it can trend very, very well. So let me just realign this so we get a picture of it. Yeah. So if you look at this initial boom in the market from 2017, that's April 2017, to the high of December 2017. So Bitcoin rallied by a whopping 1,530% roughly. So Bitcoin, when it moves, can move very, very quickly. But we also know that when it moves against you, it can drop very quickly in price, which it did. So of course, this was this initial boom in the cryptocurrency space. That's when a lot of wealth was made and lost. There were a lot of rich people that were made, and ultimately that gave them a sort of false impression of being able to invest correctly, when in fact They were just on the right side of the market in a very new market. But if they didn't have a good exit management system, they would have lost a significant amount of that profit. Price fell from the high in 2017 to the low in December 2018. It created a base, formed an area of consolidation. So this is where price didn't break above this high point until December of 2020. So there was quite a period where the market was going sideways, and then we saw this next leg up, which was a move of around 220%. Price then corrected, printed a new high, all-time high, and then it's from November 2021 where price has really been in this free fall. Now, if we look at this in more detail, where is current price action? Well, first of all, it's finding support at that previous high point from December 2017. You'll notice there these black dotted lines. These are key levels of support and resistance. So we have a tool that's based on an algorithm, and it will automatically detect these key levels of support and resistance, and it will automatically plot these lines for us. If you're manually drawing lines on the charts, you may need to consider upgrading the software and the tools that you're using. And a way to get access to that is by completing the scorecard in the description below, and you'll then be able to clone our page, this page that I'm using, that I'm doing my analysis on right now. You'll be able to clone that once you have completed the scorecard. It really help you to up your investor game. Remember, you want to do less work to make far more profit. You're spending a lot of time drawing lines in a chart, then you really need to consider your approach. Invest some money into some good tools. You'll get free access to this for 30 days. So June, price declined, came to this area which was previous resistance, now acting as support. It's also coupled with that $20,000 round number. And we can see if you look at July so far is finding an area of comfort around that support level. Very rarely will we see price come to a key level of support and just sort of bounce off it. We saw that back here. Price created a consolidation over a 3-year period. That was December 2017 to December 2020 before price eventually broke out. So what does the future hold? Well, if you look online, everyone's saying that Bitcoin is about to bounce. Well, it could do, but there's also a very strong chance that price could stay at these levels for many months to years before we actually start seeing another rally. The point is, right now, price is finding some kind of support. If we move across to the weekly time frame, now the pattern that I revisited, that I'm revisiting today, that I highlighted in my previous recording, was that whenever price came to the weekly 200 simple moving average, which is this black line, there was a rally to the upside. The 200 simple moving average, if you're new to moving averages, is simply the average of price over the previous 200 weeks. So in a bull market, we want to see price trading above the 200 moving average. In a bear market, below the 200 moving average. The 200 simple moving average is also a level where price, when it comes to it, tends to bounce back off to the upside. So we saw this in 2018. There was a bounce to the upside. Then again in 2020, and there was quite a significant bounce to the upside. Now this orange line here is the 50 simple moving average, which is also a key level of support. This gives you the average of price over the previous 50 weeks. You can see price came to around this level, bounced off it. When it broke through it in December of last year, that's when price then moved back down towards that 200 simple moving average. Now it's currently trading below it, but again, these are just sort of zonal areas. These aren't hard levels. Price doesn't always come bang onto these levels and bounce off it. In the past, it's done that. It did that here. It did that here. It didn't really break below the 200 moving average, just sort of bounced off it. Whereas this time it's broken below it, but it hasn't really gone into free fall. It hasn't weakened any further. And the reason for that is that $20,000 round number where price is currently trading around. So price is finding some kind of support zone. It's finding a little bit of comfort. We've been here now for 1, 2, 3, 4, 5. We're into the 5th week of consolidation around this area. We could potentially now see price move back to the upside. However, if the low of June is broken, then we could potentially see further weakness. And we're really in that territory where we don't know what the market is going to do next. We can only look at the history and build a picture. And we know that whenever price comes to around this area, it tends to rally. Will it be different this time? Well, that's really down to the forces of the market. If we come down to the daily time frame, we can see price finding comfort in a lot more clarity. It created that low in on the 18th of June. We're now on the 15th of July, so a number of weeks where price has been finding comfort at this level, this $20,000 round number. If you're looking at more detail in relation to the moving averages, price is below the 200 moving average on the daily. It's below the 50 simple moving average on the daily. It's trading around the 20 simple moving average. So once again, if you look across all three time frames, now a point that I forgot to highlight on the monthly time frame, price is actually trading below. If I just open up the monthly time frame again, this red line is the low of last year. Any assets that tend to be trading below the low of last year, that's the calendar year of 2021. That's the lowest point price reached. When an asset is trading below the low of the previous calendar year, it tends to have a bearish bias. So on the monthly time frame, we have a bearish bias. On the weekly time frame, there is a bearish bias because price is below the 200 simple moving average, but it's finding support around that $20,000 round number. On the daily time frame, price also has a more bearish bias because it's below the 200 simple moving average. So across all three time frames, there is a more bearish picture than a bullish picture. However, if this support level holds strong, we could see a bounce back to the upside. So there is a little bit of patience needed here before we do see a clear direction to the market. Okay, so let's switch over to Ethereum and see how price action has performed. So as always, we'll start with the monthly time frame. Now the difference between Bitcoin and Ethereum is that Bitcoin is trading below the low of last year, whereas Ethereum is trading above the low of last year. So if we switch back to Bitcoin, you can see that Bitcoin is trading below the low of last year, whereas Ethereum is trading above the low of last year. However, if you look at where this decline has fallen to, it's fallen to that $1,000 round number. So price likes to move towards these major round numbers. It's trading below the high of 2018, which is currently acting as an area of resistance. If we go to Bitcoin, Bitcoin is actually trading above or around that level, whereas on Ethereum, price actually broke below this level, which is currently resistance, but it is finding support at that $1,000 round number. If you look at July, we are seeing bullishness come in, bouncing off this level as support. So if we can see price move back above this level, that's a strong sign that we could see a recovery in the market. Similar to Bitcoin, price is trading just below the 200 simple moving average. If we move back to Bitcoin, we can see Bitcoin is below the 200 simple moving average. On Ethereum, price is trading around the 200 simple moving average, just below it. Current price action is trading around that level, but last few weeks it has been below the moving average. Again, finding support at that $1,000 round number. And if you come down to the daily time frame, if I just open that up, price is below the 200, the 50 simple moving averages, and it's inside this area of consolidation around that $1,000 round number. Again, if we move back to Bitcoin, we can see a very similar picture. If I just sort of switch between the charts, you can see how similar they are in price action. Bitcoin, whatever Bitcoin does, Ethereum tends to follow, or vice versa, whichever your allegiance is with. It ultimately doesn't really matter. Both of them tend to move in a similar way. So similar to Bitcoin, Ethereum is displaying more bearishness than bullishness across the board. On the monthly, as already mentioned, price is below this PIV level from 2018. That's the high of 2018. It is above the low of last year, but it's below this major area of support, which is currently resistant. On the weekly, price is below the 200 moving average, but it's finding support at that $1,000 round number. And on the daily, price is below the 200 moving average, the 50 simple moving average, currently trading around the 20 simple moving average inside this area of consolidation. So across the board, price is displaying more bearishness than bullishness, but we want to see a bounce back above the 200 moving average on the weekly, and we want to see price move back above the 2018 high, and that could then suggest we could see further strength in Ethereum and the crypto market as a whole. So I hope you found that useful, guys. Don't forget to like, subscribe, hit the bell notification. Where do you go from here? Well, go down into the description below, click on the link. The link will open up into this scorecard. Are you ready to skyrocket your stock performance? Take the scorecard by clicking on this button. It will take you less than 2 minutes to complete, guys. At the end of this scorecard, you'll get a fantastic report detailing your performance, but you'll also get 30 days free access to the Hot Stocks Vault, where we share the 10 best performing stocks every single week, saving you time and money having to find these stocks yourself. We also share with you the 3-screen setup that I've used so that you can conduct your own analysis across all different asset classes. See you in the next recording.